Today, I've decided to talk to you about interest rates. This is not a topic I wanted to discuss. It's complicated, it's hard to predict, but I had so many different customer questions this last week, and then also a good friend who I thought listened to me over the years when I talked about my boring mortgage banking job, and clearly she did not listen because she sent me an article. It's from 2016, but it did have some good information in it, and she basically just said, is this true? And so I read it, and it is true for the most part. And what I want to tell you about that is the first thing it said was, when the Federal Reserve says they're going to lower rates, that does not mean your mortgage rate is going to go down the same amount they say they're lowering rates. And I actually had a customer ask me that earlier this week. They said, I heard the Federal Reserve is lowering rates a half a point in September. Does that mean my mortgage rate is going to improve by a half a point on that day? And they're shopping around. They're not ready anyways, but there is that perception that the Federal Reserve controls mortgage rates. That's not true. It all ties together for sure. And in my prior mortgage banking career, I had a period of time where I was responsible for locking in large pools of loans. I would lock them in up front for customers when I felt like rates were going to get worse. That way I could offer them a good rate when actually rates got worse later, but I'd already bought a commitment. So I don't want to go in the weeds and try to explain what my job was. But overall, I either locked in loans, or if I thought the market was going to get better, I did not lock in loans. And it was kind of a stressful job. I got very good at reading whatever reports I could get my hands on. And back in the day, we didn't have 25 bazillion apps and opinions and advisors to tell us what was happening. I had Prodigy back in the day. It was a Yahoo thing that I had to pay for, and that helped me track the 10-year yield. And to this moment, the 10-year yield's still a decent way to go. Yes, there's mortgage-backed securities. There's a whole lot of other fancy things going on, and it can get very involved. And there's experts out there that know all about all that stuff. I'm just saying, in general, as a consumer, if you follow the 10-year yield, if it's edging up, mortgage rates are probably edging up. If it's edging down, mortgage rates are probably edging down. And overall, when the stock market gets worse, the bond market gets better. People pull money out of stocks, they put them in bonds, which makes our rates go down. The perception of what the Federal Reserve does has a big impact on the stock market, and then in turn on the bond market. So I'm not saying the Federal Reserve making differences and changes doesn't affect us. I'm just saying they don't have 100% control over the mortgage banking rates. They just don't. So I just wanted to clear that up. And if you talk to anybody, any kind of loan officer, and you're trying to get some feedback from them on what they feel is happening with the market, they're not going to 100% know, but they should definitely have some sort of knowledge and background in what happens with rates. When might they go down? When might they go up? And leave it up to you. If you want to lock in your rate like I used to do when I was worried about rates going up, I did it. If I was going to lose sleep over it, I locked. But if I thought, I can give or take an eighth or quarter percent change, I think I'm going to see what happens. It's called rolling the dice. And based on whatever reports come out, things can affect the market by the minute, literally by the minute. And also things that are completely unprecedented, things that we don't even know are going to happen. A world leader suddenly dying. The yen, whatever the yen did 2 Fridays ago. I'm not even going to try to explain that. I'm just saying there are strange things that happen that are completely out of our control. And we might tell you, oh, the only report coming out is the CPI report next Wednesday. And if that shows inflation is dropping, that's great. And then 20 other things happen before that report, and it all goes in a bad way. So that's all I had to say. Just know that you're talking to a loan officer that kind of has a feel for it and can talk to you about it. And if they don't seem to know at all, find a loan officer that has experience and that can talk to you about these things. Okay, ciao.